Welcome to Epic Stock Due Diligence. Please subscribe at youtube.com/EpicStockDD. Thank you.
Hey everyone, Ed here, back again with another exciting episode of Epic Stock Due Diligence. Now today I wanted to talk about something. This is a question that's popped up quite a bit. And by the way, I appreciate all your feedback because it helps me to think of new video topics. But what are the most important technical indicators to look for when evaluating a penny stock? Now, as always, this video is for entertainment purposes only, should not be considered a recommendation to buy or sell a security. But when I'm looking at a penny stock, number one, I expect to lose 100% of my speculative investment. But beyond that, what I look for, and this is what deters a lot of people from trading stocks, is that they think you got to know all this about finance and all of this other good stuff. You got to be great with math. You got to know your numbers. You got to know all this financial terminology. And the fact of the matter is, I know a lot of successful traders that don't really dwell upon that, and they could care less. And even if some of them do have that experience, but some don't. And when I look at a penny stock, the number one thing I look for is volume. And volume is important, and a lot of people don't realize this, because volume is important because in a stock market, people are making money or people are losing money based upon the market fluctuations. If it's going up or it's going down. Now, I don't short stocks, so I don't, and that's just a personal preference. I don't short stocks, so I don't make money when a stock goes down. I only make money when a stock goes up. So all my comments are geared towards making money when the price per share increases. But if you don't have volume, that stock price is not going to change. It takes volume, people buying or selling, to enable that stock price to change. People are dumping their positions of a company. If more people are dumping positions than are adding positions, that stock price is probably going to go down. If the buys outweigh the letting go of positions, more than likely that stock price is going to go up. So if you don't have volume, you don't have anything. You just got a stagnant stock that's not going to make money or enable people to make money or lose money. So volume, in my opinion, is the number one technical indicator. I don't care what the share price is. I don't care if this company, after someone performs their due diligence, so they feel, oh, this is the best company ever, and then you look at a chart and it hasn't had a single trade, or maybe just a few thousand shares traded throughout the past year or so. Not to say a stock can't wake up. There's stocks that have been silent for months or years, and then all of a sudden they wake up and explode, and people that bought in during the silence were already in there and they were front-loaded. I mean, they had all these shares cheap, and then it exploded and they got lucky. Does that happen to every stock? No. Is that a common occurrence? Within the OTC markets it is. But is it something that the probability is in favor of the trader? Probably not. I mean, it's just it's a guessing game at that point. If you're trying to get in on stocks that you feel might wake up in the future, nothing wrong with that. Maybe put some of your profits from other penny stocks into these sleeper stocks, hoping that they might wake up. I've had a few wake up, and some of these were 0.0001 price per share, and it feels great. I've had a lot of them that have set at nothing. I couldn't get rid of them if I wanted to, because they have no bid. So for that reason, volume is my number one technical indicator. And my number two technical indicator is share structure. And you can check out my other videos where I more thoroughly break down share structure. But at a high level, if you got a stock, and the analogy that I use in my book, you ought to check out my book if you want to. It's The Penny Stock Perfectionist. You can look in this video's description, or you can go to the main page of youtube.com/EpicStockDD, and there's a link below me in front of the bull on Broadway that says buy my book. And I give a good explanation within that book, but I'll give you an explanation here as well. The best way to think of share structure is if you got like you got a bathtub and you drop a cinder block in it. That's going to make quite a noticeable splash. Now take that same cinder block and drop it in a swimming pool. It's still going to make a noticeable splash, but the body of water is bigger, so it's not going to be as apparent. Now take that same cinder block and throw it in the ocean. Probably won't even notice it because the ocean is so vast. And the same thing, that's the best way to visualize share structure, because when you're dealing with share structure, when you're looking at these penny stock companies and people say, oh, that stock is cheap because the price per share is .0001, cheap doesn't mean cheap because, well, it's .001, but the authorized share count is like 5 billion. The shares outstanding is like 3 billion. So at a high level, without getting overly technical with this, it would take a tremendous, and I mean a tremendous amount of volume to even slightly uptick that stock. So think about that. Now you find those triple zeros or those double zeros with excellent share structure, those can be hidden gems. Because when and if, whether it's news, maybe some sort of pump, maybe filings that have hit, something like that, that ignites that stock. Those stocks that have excellent share structure, those are the ones that can, boom, really move on little volume. And the ones that can really move with a tremendous amount of volume. So keep that in mind. For that reason, share structure is my number 2 most important technical indicator when it comes to penny stocks. Now number 3, and beyond those first 2 are definitely number 1 and number 2. Number 3, it's kind of hard for me to say. I'm not a chart guy. I do look at a chart. And what I do, I look at the chart for the past few months. I look at the chart for the past year. And then I look at the chart for the past few years. Is this a company that historically likes to reverse split? Now, why is this important to me? Well, if you're on the forums, you hear people say, wash, rinse, repeat. Wash, rinse, repeat. What they're referring to is that these companies, they'll frequently reverse split, meaning that instead of having a few million shares, after reverse split, typically a person would only have a few thousand shares. Because the price per share after reverse split, the price per share is higher, but the person that had those shares prior to reverse split will then have a fewer quantity of shares. And a lot of these companies, they do this wash, rinse, repeat process with reverse split. So when I look at a chart and I see every few months or every year or so a reverse split, you know, a 1 for 50,000 share reverse split or whatever, when I see that, to me, that tells me that, I mean, ultimately, every penny stock, as I reiterate over and over, is an opportunity to lose 100% of every dollar thrown at it. And that's usually what happens. But these that are prone, that historically have continued to reverse split, that to me just even more strongly signals the possibility that in the future they'll repeat that trend. So I stay away from those. But, you know, looking at those first 3 indicators, those are definitely my top 3. Number 1 and number 2 are definitely, there's no way I could change those in and out. But number 3 and 4, they may be able to be somewhat interchangeable for me, even though I lean more towards what I just said about the reverse split. But I like to look at historical news. Was the news released by the company? Was it, historically, has it been solid? You know, if they say, hey, you know, we're going to release this new product and it's going to do this. When that product was released, well, did they release it when they said they were going to? And was the product exactly what they said it was going to be? Or was it kind of flim-flam? Meaning that, well, they reversed this product, but although they said it was going to do this, it kind of did that. You know, it was a disappointing product. But a company that puts out, that has historically put out news, press releases, that when they distributed that news, it matched up with what was actually delivered, and what they promised to deliver was actually delivered within a timely fashion. That to me is a positive sign. And a negative sign would be companies that put out those press releases, that have put out those press releases in the past, and they have a track record of not delivering on what's promised. And the other thing, you look at those press releases, a bunch of forward-looking statements, and a lot of companies like to use those forward-looking statements that never come true. It's basically just an opportunity for them to say, we intend to do this, we hope to do that, but they know they have no intentions whatsoever to work towards that goal. All that they're trying to do is manipulate share value. So, you know, that's something to be aware of. And let's see, beyond that, I'm trying to think what the other stuff is. I mean, there's so much that goes into this, but if you think about these, and I've got some more here when I think about it. So we went over the news, and then the last thing that I look at, every time I see these filings and these press releases, you can go to otcmarkets.com, like I've stated in other videos, and you can look at all of this. It's public information. It's not like you're being creepy or anything. And you can see the officers and everybody involved with the company. Well, today, the past few years, it's been like this, but you can go to Google and you can search for those people. And more than likely, those people have a profile on LinkedIn or maybe a company profile. Check them out. See who they're associated with. Do a Google search. Do they have a spotty history? And if so, are they in charge of that company? That may pose a heightened amount of risk, a heightened amount of speculation, rather. So, you know, just something to keep in mind. People that have in the past performed well typically will perform well in the future, and people that have performed in a sketchy way in the past, that trend will likely continue. Not to say that it always will, because with the internet, there's opportunities for people to falsely paint the image of someone being different than they are for whatever type personal gain or whatever. You know, maybe they maybe they have a company that produces a competing product or service, and they want to try to discredit their competition. So there's a lot of stuff like that. So don't always assume just because you read something on the internet about the management of that company that it's actually true. So if you do all of this, and like I said, this and all my videos are for entertainment purposes only. I just enjoy doing this, and it's not a recommendation to buy or sell security. But this, at a very abbreviated state, this is my thought process. This is my thought process before entering any highly speculative penny stock trade. So I hope you enjoyed this video. I got a lot more videos coming soon. And if you haven't subscribed, I strongly encourage you to do so. It's youtube.com/EpicStockDD. And share this video and any of my videos with others. And check out my book, The Penny Stock Perfectionist. It's available in Apple iTunes Store. Only costs a few dollars. And you can check that link within this video's description. Also, if you just go back to the main page of youtube.com/EpicStockDD, where I'm standing there in front of the Bull on Broadway up in Manhattan, you can click that little thing that says buy my book. So thanks for watching, and as always, y'all have a good day.